Right, Legis. So this session is a session based on trading level to level. Now, there's different types of trading level to levels. This specific one is short term, very very short term. Now, if you want to use that and make it into something bigger, change it around a bit, make that into like a larger time frame type of idea, that's fine as well. This is more towards if I've got nothing else on the table, right? I just rely on this a lot, okay? Plus the high probability, and again, you must do the work behind it, practice it, find examples of it. So, basic background behind this type of setup is just it's usually not the start of the week, it's usually in the middle of the week once we've got a weekly range set. So, once we've got a weekly, the price for a week started, okay, and we know where the range boundaries are. Why? Because this is type of setup that works, while in my opinion, within a range. So once the new week starts, for example, say that was 1 week, okay, and then once the new week started, I'd wait, and it usually set up in the middle of a week. So let's just get stuck in, okay. So this is an example here. So the trade idea is from where's it gone? Lost my fucking thing. 1 second. Yeah, the trade idea is from here to there. That's the trade. So let's talk about background. So you can't forget everything else. Like, you've got to do all your levels and higher time frame levels, etc., etc. That's got to be done. Okay. So what's the context? Once the context is set, you're looking for the middle of a move. Okay. So for example's sake, I'm not gonna go over drawing out the mark levels. You have the higher time frame levels, okay. But the main thing to take from this is we can see this is the level that's capping the market here, and that's the level that's capping the market there. That's a deviation, okay. Later on, that becomes a deviation, okay. But high time frame, this is a high time frame level. It's come off of that. It's re-entered the range after taking the stops. Okay. The question here is, okay, where is it likely to go? Is this going to be a deviation then go down? I don't know. So I'm not willing to enter here. Okay, this is not it. I let the market come to me, and often I don't look out for it. When you see it, it's clear. So then I look for, and as price unfolds, I say, okay, if I am going to go long, probability-wise, these clean highs are going to be objectives, aren't they? Okay, into a key high time frame level. But even if that wasn't there, that's a high time frame, because nice clean highs always magnets for price. And if the market is range bound, which it was, okay, then it's going to take one side of the market, the other side. So when it was here, came down, took these stops, then go back into the range, took those stops. Okay. So my entry for this is, or my trade for this, it can be all week for this little move. But it's not about, oh, I've just caught one trade. It's the probability of that trade. How high is that? Because that one trade could be more than five other trades. Because each setup has its own probability, and you can't ask me what is your high probability. You gotta figure out that yourself. Even if I explain this to you, you're still gonna trade it differently. For me, this is what's clear. So you take what you like from it, you leave what you don't like. Okay, so it's come here and it's lining up with clear resistance, resistance. So at this point, you're thinking, okay, if it makes a break above here, with the context is it's range bound set. Okay, there's a high probability these highs are going to be taken. Is that clear so far? Is everybody with me so far? It's important you understand the basics. Where the range is set, you've got your high time levels drawn out. So then it comes down to, okay, I want to play the high probability. I missed out on all this. That's fine. I don't care about that. I don't have the balls, whatever reason, to enter full size on this. But what I do have is from this little move here. And how much is that? I mean, from the best case scenario, it's about 40 odd pips. I can get 20, 30 high probability pips out of that. So, comes back down to the session I did before on invalidations. So I'm looking for this. I'm looking at this. I'm thinking, okay, where do I enter now? Okay, it's unfolding and unfolding. Okay, it's broken above. Leading to that move, okay, leading to that move, we've got deviation. As soon as it closes above, boom, that's my minimum trigger. The context suggests that the breakout that happens now should be high probability, engineered toward that target there, and that's my entry at the close of this. Okay, I need a H1 or whatever the time frame. You can play around with the time frames yourself. Go test it out. Don't say which one it is. If you got a question like that, just go test it. Go to the chart, look at it, and you find your answer. That's the best way, because then you internalize it. I'm just gonna give a basic blueprint. Okay, the best ways are the basic blueprints, and if you do the work yourself, that's when you internalize it. Okay, there, and then your invalidation level is here. Okay, because once you've done the deviation, it shouldn't come back below there, is it? And the reason why you enter and close above instead of all the round retest stuff is because the context has been set. Once the context has been set, then I don't need to worry about confirmation. You understand? So that's it. That's the confirmation for me, because I know where I'm wrong on the ID, no doubt. I know where this is. All this is based around what's happened already. The range bound environment, the higher time frame level, the deviation backing in. We're just continuing on the play, and that's your entry, target, done. Anything else is just bonus. This is it, that's it. I usually enter and I'm out. Done. Okay? Maybe leave a small portion and that's up to you. Then you can refine that entry and say, well, I want a bit of confirmation, retest there. Okay, you got that there if you wanted to. But I'll give you the minimum, and that's that to that, and that's it. In the middle of the week, near towards the end of the week, just for that little move. And if you look at enough pairs, you'll find loads of them. I do this all day long. Okay, sometimes I just don't have the time to post every single one because I'm trying to post the best setups only. But that's it, done. Let's move on now. So is everybody clear with that setup? I'm just trying to show you what it looks like. Yep. So are there any questions before I continue on this? So I've told you it's a consolidation environment. Okay, you can do, yes, that all those sort of stuff will be further confluence. Okay, all that will just be further confluence. This is just pure SR. So I did a concept video before that, and it was using level to level, using range levels. You can then introduce those things. Okay, that's fine. You don't always need it, but yes, if it was the mid range, that would be a further high probability setup, wouldn't it? So for example's sake, that's a good point you mentioned. But that's above the mid range, isn't it? When we're getting on board, that's higher probability, isn't it? Agreed? So yes, you can do that as well if you want. That's why I said you add in the stuff you like. That's done. So I'm going to use both FX examples and crypto examples. I find that crypto works really well. Okay, but it's just that because crypto moves more than FX. Let's go on to gold now. Gold was an example. Ignore the mess. I'm going to have to keep this in. But this was an idea. So the higher time frame levels have been set. That's the mid range, etc. And we identified that that's a key resistance level here. So it deviates. So that's a resistance. Deviates. Once it gets back below, it sells off. Once it deviates, gets back below, it sells off. Okay, that's one range. That's the context has been set. The week started already. So now what we're looking for is the little moves. Okay, so one of the examples was within that range we have this key SR level. And remember, I did this live with you guys. So we got that SR level there. That's acting as a pivot here. Identify the pivot. It further proves that pivot is here. It deviates. So once it gets back above it, rally. Here, and here. Okay. So everything's been set. So what we can take from this is that every time it deviates that level and gets back below it, it pushes lower. That's all I need to know now. So then I gotta look for targets. So everything's set here. If I miss this, remember we took this trade example. Was it last week or the week before, whatever? So what I want to do is the rule is, okay, if it deviates back below it, then where should we pull towards to? High probability target, this level here, and your move is just to there, and that's it, done. In this case, you can use the range levels, okay, as an objective, but that was it. That's it. Okay, so in this example, it hit the high time frame target. I don't have the boards to enter here, but what I do know is that's a big level, isn't it? And the market is range bound, and as you can see, the main rule has to be it's going to be range bound. Because if you think about it, why is it range bound? Because if it deviates it and then starts trending, that's a trending environment, so the setup's not going to work, is it? If it's range bound, then it can pull all the way back down into the other end of the range. So in this example here, it rallies. Now usually what I like to see is when it goes above, I like to see some sort of consolidation then breakdown. Okay, it's not always going to be perfect, but in this example, as soon as it closed below, boom, that was enough. My invalidation level is set, which is that high there. Okay, and I play it from there towards there, and I'm done, and that's it. Anything else is bonus. Everybody clear with that? Let's do that again. Here. Now this time, what was the time here now? So this is towards the end of the day. I don't really like this, okay? But if you want to do the same thing, what was the rules I like to see? Ideally, what I like to see is this sort of pattern. Break above and then consolidate. Heavy. And we'll see that with the SPX. But remember how many times I've said, if you get a consolidating, then a break of a level, that's high probability. Whereas if you got that, that's not. I don't want to see that. Like this, I don't want to see, but it was easy trade, okay? So let's move forward. Do we get another one? I'm sure we had another one here. Here's another example here. So again, now this is an example where the consolidation wasn't above. This is the key pivot. It wasn't above here. So it pushes down. So at this point, you're thinking this could have been a trend. But it maintains that and says, okay, it recaps it. As soon as it gets back below it, on the 1 minute, that would be enough of an entry. Your stop loss is above here, okay, or a clean break above here. So if sometimes you got to leave it wider. Say you left it wider there, and you know that this level should cap it. Sometimes it's like this, isn't it? Double top. So in this case, as long as it doesn't make a clean break above where you're targeting, clear high probability setups where the stops are resting there as easy target. So on the 1 minute, you'll have an entry, okay? Or sorry, here below here, it's gonna be below this pivot. Okay, that's what we're looking for. So not this one. Why? Because it's dropped already too fast. Okay. Whereas here, it's got that consolidation going on, hasn't it? Above this pivot. Can you see the difference between the two? That's got a big drop already from there to there. We don't want to see that. But what we want to see is like more of a like this, closer up. Okay, when it breaks it, pushes back above it, and then makes another attempt. On the lower time frame, you'll see another entry. So if I highlight this, and let's go to the lower time frame. Okay, in this case, even 1 minute is enough. Again, basic blueprint. You do the rest. 5 minutes enough. You're wrong above here. You know your target there. Done. It's not always the best risk to reward trade, but the strike rate is kind of high in this. Okay, everybody clear with that setup? So are you getting a better eye for it? Let's do more examples so you get a better eye for it. That's all it is really. Nothing special. It's just training your eye and practicing it. But me saying that, bet you loads don't do it. I've gone over this many times, but still people don't do it because they're lazy fuckers. So let's continue now. Let's do a bit of crypto examples as well. Come back to FX, mix it up a bit. Let's do ES. ES was one example. Okay, this is more of a higher time frame stuff. I remember when I said this tweet. So let's go back. And I said, let's see where we're at. A real time example this was. Here. Remember this tweet I did on Monday? Here, when it was down here. I said, okay, I said, based on, I said, let's see where we're at by Wednesday. Okay. We're up there by Wednesday now, isn't it? Perfect timing. So what was this based on? So again, the higher time frame context must be set. What is the key significance of this level? This is just more on a higher time frame basis. This is previous all-time high. It's a key pivot, isn't it? Has it? And then you gotta say, has it proven to us to be a key pivot? Sometimes you get a level, but it's not key. When it breaks above it, it's pushed above there. When it makes a clean break below it, it pushes lower. Clean break above pushes higher. Okay, done. That's all I need to know now. And then it comes down to setting the invalidation. Okay, so in this example, when it pushes lower, in this case, if it was to break below here, the next high probability objective would be here, right? Agreed? So if it breaks below here, you're going to look for a level. So when it broke below, in this case, different, it's just too quick of a spike. So when it breaks below here, your objective is here, and then each low at a time, ultimately into the base there. And then we'll see what happens. Okay? So everything's set now. You got to do all the work already. You have to do the levels, higher time levels. Everything must line up. And then we go to the entry now. So this says to me, okay, we've topped out, and this is more of that on the lower time frame. Imagine this is a 5-minute chart. Okay, it's that consolidation phase. Okay, so here, in this case, I don't like that trade here because it's too fast. Then it goes back above. It does that consolidation thing above the key level. So I'm saying, okay, at this point, right, where am I wrong in the idea? Well, if it's going to go lower, and I discussed the higher time frame context behind this already. We won't repeat that. That's in the reviews. You should all know this, okay? If you've been watching the videos. But we would know that, okay, we've taken out last week's, this is a key pivot as well. Support, resistance, support, deviation, support. So we've had many attempts at a move lower. Finally, we break. If this is going to go lower, we've broken a key level. We should not break above the consolidation that's taken it lower. Everybody agree on that? Does that make sense before I continue? It's important everybody's in sync. Yep. Okay. Now, based on this, at this point you're thinking, okay, maybe I know. But based on the minimum is an entry there. You're wrong there. So if you want to leave limit orders, I purposely don't do it. I can do it based on the video I showed you, but I've got OCD. And that OCD doesn't allow me to. That's why. So I don't fight it. There's many entries I can get with limit orders. That OCD doesn't let me. So I know I'm not going to change on that. So instead of fighting it, I adjust my strategy to suit me. What do I need to suit me? Because a lot of people try to trade a certain way, and they try to be like somebody else, but they can't because everybody's different. So you got to adjust it to suit yourself. Okay, if you can, happy days. But for me, I enter a market. So I waited now. I personally waited. I did have a small position on because I was short from higher up here. So I was already. But ignore that. This is a fresh trade. So at what point is? Well, to increase the probability of the idea, as soon as that happens, consolidation, once it breaks down, that close was enough for me to enter. I know I'm wrong here, and I know what I'm targeting based on the higher time frame, context, etc. There, and then obviously each level at a time. The targets are important right now. That's the minimal target. That's enough to make you money. That's a bonus now. Is that clear? Now you can obviously do the same thing with range levels as well. For example's sake, I'll do a quick example. I knew I said I wouldn't do it, but let's do it. The difference between the higher time frame when I chase the market and when I don't chase the market. Now where the hell are you, SPX? Let me find you. Here, SPX. Okay, this so happened to be confluence with the mid range as well. So again, the context is so important here. You understand? Okay. So yeah, that's it. Yeah, that's that part done, I believe. Yep. Here is another one. Okay. Now actually, we won't do that's a range level trade. No, I want to keep it specific to us for this DAX. Okay. Let's do DAX. I was supposed to go into crypto, but yeah, let's do DAX. Okay, an example on this. So on this, the high time frame context was set. I already tried this, but again, what was this? That key higher time frame level there. Yearly open. I think that's the yearly open. Yeah, there. We've been ranging, and often again, these sort of setups are often once it's topped out and we consolidated. These are after all this has happened. Okay, these are towards the middle of a move. They're not at the start of like a fresh leg up. So once the consolidate breaks out, no, not around here. I'll be looking for the once all of this has happened. Okay, so that's why I'm happy. That's why I look at loads of markets. I shift through them, and boom, Euro Yen will have one done. Pound dollar will have one done. And a lot of my strategy is based on that. Okay, but that's a symbolic pasting like everything. But again, yeah. So going back, yeah. Let's go after this. So the context here was set. Okay, so one was we had this high time level, which is the monthly key level here. And at that point, if you remember, the ES and the US indices were looking topped out. They went into key resistance. Okay, the first sign that I actually got was from for this was from the US indices. They showed that sign. Okay, so if you remember, we were looking for short opportunities here. So all this has happened. So we got the consolidation. We're below that monthly level. We're below all of this. You remember the setup there was this, and when it broke down, we pushed lower. Okay, so here is the key level here. So here it deviated above here, but I wanted to wait for a lower time frame range for the confirmation. But the context was set in the sense where we're below that monthly level. We couldn't break above the yearly level. Okay, everything had been set, and then high probability targets we talked about here. Oh, this was the mid-range monthly open. Okay, close below entry. You can have a hard stop there, but you cut it on a clean break above here. Okay, target one done, and that was it. Okay, so all that just for this setup here. You're not gonna get it all the time, but when you do get it, you know it's high probability, so adjust my risk. So that's being said, that means I can put higher risk behind the certain particular type of setup. Now you don't just gonna go in and do that. Okay, you're gonna practice it first. Okay, DAX again. Now the context was set for this. Okay, where it was bound to go lower, especially with the US indices going lower. So logically, where was the next level? This is a monthly low. I think it was June or July low. Okay, support, and it bounced there. I said, well, let it break above. Once it does the bounce, then we can get on board. Because you don't want to get on board when it does straight down, because there's a good probability it pushes back up. So let's do it here. You know the objective's there. It does that bounce. It comes here. I like this. I like to see this, because then it sets an invalidation level. And as soon as it closes below here, boom. My hard invalidation level target. Now, obviously, you can work on tightening invalidation yourself. Okay, does that make sense? As to there's that consolidation above the key pivot or key level. You know your target. You know the context. H1 close below. Stop. Let's go. Is that clear? Because based on that, if it was to make a clean break back above here, hang on a minute, that's not good. You either ranges or we're wrong on the idea. Okay. And in this instance, obviously all the indices were falling as well, so momentum was behind it already, overall, across the markets. Okay, these are just basic examples. You're gonna have to practice them. Let's go on to crypto now. So let's go to Ethereum. Where's my Ethereum? Sorry, I want to find the chart. So you all know I'm short Wi-Fi anyway. I posted it. Ethereum USD. Okay, we've discussed this already. It was easy mode. See, this is what you're gonna do. This if just pick these best ones only. Okay, sometimes if you're married to one market only, then you're gonna miss out on them. A lot more money, like crypto, right? Bitcoin wasn't the easiest, cleanest. Okay, I don't know why there is this so fucking obsession with it. You know what I mean? Like, how much easy money have we made off alts? You know what I mean? Yes, when Bitcoin's easy, I'll trade that. But if I have a choice, I don't look at the ticker. I look at what's easy right now. Where can I put money? I was putting more money behind FBTC short. I had a huge position on compared to what I would do on a Bitcoin position. Why? It was easy play for me. I still made my money in Bitcoin on BitMEX. You know what I mean? Whatever you prefer, but that for me that was high. It may have been less of a move, but to make up for that, I put the bigger size on. You understand? So let's carry on now. So this again, this FUSD short, high probability play. From there towards there, done. That made up for my loss, and I put a big. That I made more here than I would have on a move like this. Why? Because the specific move, high probability trade that what's it called? It was so the context was set here. Everything had lined up. Okay, so we spoke about this, and I said, okay, I was squeezed out on this, but I waited for this. And yes, last night, I mean, I was watching this. I said, okay, if I'm correct on this, and if I'm squeezed out, because I did say, when do I really get bullish? It's still gonna be above here. Okay, this is just a squeeze. This does not mean we're bullish now. This just means I was wrong. I should have cut it here. So initially when we dumped, I should have cut it there. Okay, but I had a smaller position on, and I didn't. Okay, so I make mistakes, but and as soon as I seen this number, I said, okay, game over. This was a squeeze. My timing was wrong. Now, I'm not aiming for a massive target. All I'm aiming for, high probability objective. Last week's Monday's high. I know it's a key pivot there. Key pivot there. I'm not even going for these stops. I'm just going for this, and that's it. Okay? And that is, you're going to be disciplined like that, because sometimes you can get ahead of yourself. Well, no, I'll go for this. I'll go for this. No, I don't do that anyway. I know, because if it breaks below that, I'll get in again. But I'll get my move, and I'm done. So, what was this? High probability you're looking for. Okay, you know this was the same trade as here, really. Okay, just once all this has unfolded. So again, what were we getting? We know, and the key thing to also this is identifying the key levels. This is all framed around a key level. So if you shit at drawing levels, okay, then you're gonna have to practice your drawing levels. And you see me do it day in day out. There's no excuse. If you say to me, "Where do you draw your levels?" I'm probably gonna beat you at the group, because if you see me doing it day in day out, and then you ask me, "Where's the key level?" You're taking the piss now, aren't you? But we identified this before. Key pivot resistance, deviation. But it's piss take though, isn't it? I mean, if you see me every single day do it, and then you can ask me that question, it shows you're just a lazy cunt. You're probably not gonna make it in trading. It's just straight up. I'm gonna tell you how it is. So key pivot there is proving us out that below this level we get a reaction. Okay, that's what I'm looking for. Identify the key level, and that's been identified already. So all I'm looking for is my rules. Where's the stops resting? And me high probability target. That's the high probability target. This Monday's high. It's a magnificent price, isn't it? So we got the price activity. Now, if this had happened where we got a straight break below here, no, I wouldn't have entered that then, because the moves happen, then it gets messy. It bounced, 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 boom. Context has been set. Closed. That was my entry. I personally took that entry there, and I got out there. I actually took some off here actually, and then I said maybe retests. And as soon as it rejected here, I entered back in, because then the retest was done, and I got out there, and that's it. My hard invalidation was there. Now it's not always a 1-to-1, sometimes less than 1-to-1, but the strike rate's high to make up for it. Is that clear? And all that was from there towards there, and I'm done. That's it. Is that clear? This shit better not be public. I'm not even going to label it as a concepts video. I'm just gonna put it up a normal video, because this shit's gonna be ripped off, just like every other fucking video, like ranges. But yeah, okay, let's move forward now. Let's do Link. Remember Link? We spoke about this already, but I'm gonna repeat the same thing. Link was a beautiful, so beautiful. We identified this as our range high. Okay, we rallied there, and the range low was identified as this level here, there, and then there. So we know it's within here. Every time it deviates, it goes back below here. So the high probability players. Okay, so deviation, right? As soon as it gets back below it, we're looking for that same setup. We discussed this one before, but because it's a teaching video, we include all the examples. So again, we didn't get that consolidation above here, did we? And it spiked down, so we don't enter here. The move's done, but we get it here, don't we? Consolidation. Okay, if you wanted to enter here, that's fine. Okay, in this occasion, my rule is usually this is why this is an example where I use wider stop usually, okay? But and if it did a swing failure, I would have cut it. Okay, that's fine. If you did cut it, that's perfect fine. In this instance, we had the Monday's range, okay? But okay, if you got stopped out, then you get back in. Where's the probability? Down towards that target, done. And on the way there, if you want a tighter probability, the high that caused that low, you could just target there, done. Okay, I usually use a wider stop. Okay, I really very rarely. I mean, obviously it's hard because for some people I'm teaching somebody. I do use the sensible thing to say, but my trading style is a bit the way I do it. Not everybody can do that style, but regardless, if I can give an easy method, you gotta adjust it yourself. You don't copy the style straight away. You gotta come up with your own. So let's do this example again. I don't get how people do that. I know because I know for a fact futures you can get away with it, but FX, the spread fluctuation, the broker, unless you got a top, they'll fuck you over. But anyways, even direct market when I traded, I can't even use that. But anyways, here, same thing again. It's on the deviation of this level. That's that same level. It's like gold. This example. Once he gets back below it, that's enough of his entry. You're wrong above here. I usually keep it a bit higher to cater for a swing failure. Okay. Now if you and when you're targeting, well, these clean lows back towards the range low usually, but you got a high probability along the way. Now target wise, you adjust that yourself. Go study and say, well, I like a target into the consolidation that caused the high. Okay, you go do that. Okay. Or I like this. Or you can make a system where take half off there, half off there. That's down to you. I'm giving you a basic blueprint. Now, in this case, you could have said, well, what if it goes above of here? Okay, that's fine. What was the key thing for here? The key thing we identified, it was coming off a high time frame level and range bound market. Okay. So in this instance, let's throw in a little more confluence, a basic trend line. And you're saying, okay, see, this is when trend line works, when you got the context correct. So in this case, well, I don't want to enter here in case they bounce. Okay, break over trend line, I enter there, or a retest. Because I know I'm wrong there. I've set my target there. That was the target. This was extended. This was just an extension. You understand? So we can say this, and now because I was bearish as well, I mean, I wasn't going towards a long scenarios, but let's in this case prove to you a long scenario. So a long scenario in this case will be, okay, is deviated there. Where's usually the magnet after it pops off from there? It's usually there, isn't it? So in this case, once it deviates back above, you're thinking, I don't know. Me personally, I probably would have chased it here. A clean break below this level without rejection, I would have cut it. Targeting there, done. Now you may say, well, I don't like that. Okay, that's fine. Don't even take that one. Take one that you like. Okay? And that is it. So, going forward, I'm going to use the same range level again. If it happens that we get below here, so if it drops, consolidates, and then breaks, I will enter the short and I will target this level here. Now at this point, where would I target? I like usually, it usually takes out these stops, doesn't it? But I'm happy targeting there because the high probability is going to reach into there. You understand? So I'll go for from there towards there, and that's my high probability trade. I could wait a week for that, but when that comes, you know, I'm putting size behind that, and that'll probably be more than somebody putting 5 trades up because the probability of that trade. Is that clear? Yes, no, maybe so. Okay, let's move forward now. Let's move forward. I'm doing Wi-Fi. Okay. Now Wi-Fi is a bit different because I'm expecting new lows. But let's just throw this in there as an example where I've got an invalidation level. Okay. I know where I'm wrong. So again with Wi-Fi, we've done loads of examples on these already. You know, the level to level trades here. This is a new one. So here the context has been set. I mean, we can't breach below above here, this level here. So this is the mean level. Okay. This was the range. Okay. And until we break above this range, why is anything bearish? Ruben knows. Ruben knows the score. Okay, so we're trading within this range. Okay, that's set. Now with this, we haven't taken out the range lows, have we? So there's a high probability chance we're still gonna take it as long as we're staying heavy. And every time it's trying to rally, it gets shorted the fuck out of. People like me are doing it. But anyways, the main thing for this is identify the level. So where's the key stops resting? Well, you know it's going to be this low, isn't it? Now, we've had multiple attempts. We've had one attempt. So here, so again, this sort of setup happens in the middle of a leg. Now, I'm not going to go into lows and moves in the middle here because there are loads, but because I can't be bothered because it's straightforward. But support, deviates it. Is that clean break? No. What would confirm the breakdown is a break below here. Okay? So when a level gets tested many times, it gets weaker, doesn't it? Context, we got targets for these levels here already. What's the difference between this one here? It breaks it, pushes up, it breaks back below it again. That's the first time this has happened of this level. You with me? Couple of attempts at this level already. Context set. So, where am I wrong? I'm wrong above here then, isn't it? Consolidation, breaking mark structure pattern. But where's that breaking mark structure pattern happening? Below this key level here. You understand? Everybody with me? Then I threw in a little trend line for a bit of confluence. It's a break of a trend line as well. So nice high probability chance. So at this point, because we've been consolidating, okay, usually after consolidation, we get a big expansion move. So I think we get like an equal sort of move here. I mean, I think these targets are minimal, to be honest with you. But I can manage it. But I'm going for these targets here. I mean, here. So that would be like an equal measured move, wouldn't it? Okay. I mean, it doesn't mean, if it comes into, I don't know, this level, gives me a bullish structure, okay, I can exit it, or at least I can take some off of these levels. But ultimately, I think it's going to reach here. So does that make sense, that entry? So again, this will be another high probability play. Okay, and we played many examples like this on Uni and SXP in particular. How many times did I do that on SXP? Non-stop on SXP, okay? Go back to the videos, you'll see it. But just let's keep the video clean, okay? Let's do dot now. Well, let's look at that happening right now as we speak. So we got that range level. I'm going to mark at this level in particular, okay? So I don't want to enter this now because, why? What's the difference here? It's got a fast move. So it may still fall down, but the strategy I'm telling you now is different, okay? It's particular, it's specific. So what would be give me a high probability? We know that every time it deviates this level, it comes back to here. It touches that level, it comes back to here, right? So we've identified the range, okay? So if now in this particular setup, if you got another strategy to enter this, that's fine. I'm trying to line it up with what I'm talking about right now. So if it did this and then consolidate and then broke it, then that's high probability because this has just gone all the way down. So when a fast move happens lower, there's a good chance it pulls back. Clear with that? So that would be my entry. If ideally, I'd love it to deviate back above and then break down, and then that's my trigger. Where am I targeting? Range low, and then September low. I mean, on the way there, you could choose to say, well, I'll target here, and that's fine as well. It's a little move, but that little move is high probability. Everybody clear with that? Are there any questions? So usually you're gonna also take into account, time of day. I mean, if it's been a slow day all day and then late in the day you get it, okay, possibly yes, because the average daily range has been fulfilled. But if the average daily range has already been fulfilled, you gotta ask yourself, what's the probability of continuation? Okay. So if you get the same pattern, I mean, if you really believe in it, then I would advise do smaller size. Okay, because if the daily range has been juiced out, okay, already, what's the probability of it continuing? Not really high, isn't is it? So it may work, and you get the one-off days where you get massive sell-offs, but those are one-off days. And if you get misled into believing that that happens all the time, that's going to fuck up your strategy. So the key part of actually trading is the discipline, really. The discipline of these little stuff like that, over milking it. You know what I mean? Like you exit, like it's drop. You've exited it, and then you get them back. And then what people tend to do is say this is a move, right? You shorted here, and you drop, hit the key level. You've caught all this move. You've exited it, and then you're thinking, yeah, I want to get back on board. It's fucking 8, 9 o'clock in the night. The average day range done, and then you'll short it again here. Now this could be a low, and then you give it all back. And then what you'll also do, you'll add on. You'll add on before you know it. You fucking blown half your account. Well, a fantastic day. Why? It's that discipline. It's not that you can't trade. Well, technically you can't if you can do that. But it's not that you don't know what you're doing. It's that discipline to say, I took my profit, I got out at a logical level, I'm done. Now, the hard part now is, can you wait a couple of more hours for the new daily start before you get back on board? That's where people fuck up. Where they've milked it and it's greed. Okay? I've done it many times. I'm the first one to admit it. I used to do it all the time. Sometimes I still do it. I did it with Ethereum actually. Now with Ethereum, right? So what I do to overcome it, I said half size, and I also gave the option here. I said the high probability trade will be below here. Okay, okay, and I should have cut it below here. So I still make the mistakes. I knew because once this happened, that's a deviation. Got back above. I should have cut it there. I could have got back on board if it broke back below that. I should have exited a lot earlier. Okay, that's a mistake I made. I noted that down my journal. I was pissed off with myself when I did that. Why did I do that? Why didn't I cut it? Okay, I was in bed at the time and I was half asleep. I wrote that down because I need to know why I did it. I'm brutally honest with myself. Was I being greedy? Okay, and on this occasion I was half asleep when this happened because I didn't sleep all night, and then I was half asleep and I thought, oh fuck, and that's it. But that I journaled that little mistake there. See stuff like that where you should have got on board early because I could have got back on board. Because if this was a fake out, what's the risk? What's the point of holding it in case it does all of that? Whereas you could have just got back in, said, okay, if it gets back below here, then that means okay, that was a stop run and wants to go. I could have just got back on board there, couldn't I? But I didn't do that. Okay, so that's a mistake I made, and I'm still gonna make loads of more of them. But the main thing is, does everybody get what I'm trying to say? Does that make sense to everybody? We may have another one of this, okay? More of like a laid back one, but you're gonna practice this now, yeah? Practice this, practice this, practice. That's the only way you're gonna get it. For an example, and only be strict on yourself. Pick the best one that stand out only, and that alone, and that's it. Okay? Don't go for hyper. Be. What you should do, right, is say to yourself, right, if I'm gonna practice that, get on a demo or something, right, and even though it may go 100 points and but your target for the strategy is 20 points, just do that, and that's it. Stop. If you can't even be disciplined enough to practice for 2 weeks just by set targets, set stop, what the fuck chance you got? It's the act of being disciplined. That's what it is. It's more your psychology, really. The stuff I go over is it's not hard. Okay, it's your greed or your emotions. A good book is Atomic Habits. I've been reading that. I got the audiobook. Fucking brilliant. Don't change the strategy. You gotta change your mindset, your behavior, and then if you change your behavior, everything else falls in place. A lot of the big traders, right? You'll see them doing simple trend lines, but they know when to get out. They know when to stop. They know. Ah man, it's brilliant. I mean, I don't even read books, but that one I listen to the audiobook. Fucking brilliant. I suggest all of you here read that. Okay, it behave you improve trading. I don't think the psychology books on specific trading are good. I believe reading books on improving. It's called Atomic Habits. Just Google it, Atomic Habits. I believe books that can change your behavior because once you got that skill set can be applied. Then that skill set of discipline can be applied to your trading. But if you don't have discipline in the first place, fuck's a fucking guy writing a book's gonna do for you? You understand? That's the sort of things I like. Okay, I don't know who he's for, but I just typed in Atomic Habits.